Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, October 23rd, and my name is Raleigh White, and I'm coming to you from yet another gorgeous day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a special focus on the trading pit. And here's what he's going to be doing. He's going to review all the types of trades that he takes in the pit, including day trades, swing trades, time spreads, and strangles. He's also going to have a discussion on what all these trades have in common, the importance of relative strength and how to use it. He's also going to walk through on some of the best setups that he sees, and he's going to give us a midday update on his short and long large caps. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we have some ground rules. Always be kind and supportive when posting. Also, folks, keep to the topic, no political discussions at all. And also, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger's sharing. Because after all, he's spending time with us to help us all get an edge in the markets and to become more confident and consistent in our trading activities. Now, for those of you that joined us for Roger's 8 a.m. pre-market show, and I sure do hope that's most, if not all of you, you know that on the catalyst front, there was an awful lot to keep a focus on today. And this is largely due to all the earnings that are being posted. Not only those that came out after the market last night, but those earnings that were scheduled to be posted before the market opened. And as a result, the key catalysts here were keeping an eye on the finance and communication sector, energy and utilities, transportation and industry, aerospace, mining and technology, retail, healthcare, consumer durables, basically virtually all the key sectors had key companies either having reported earnings or have earnings coming up. In addition to that, on the Fed front, we know that we have an FOMC speaker on tap for today. Existing home sales came out and they were basically in line with expectations. And just added here, Trump is going to be speaking at 2 p.m. Now, for those of you that don't know what we mean by a catalyst, we're talking about information that is either known or will be known during today, but has not yet been priced into the markets. And therefore, we just need to be careful when considering entering into trades into those sectors that could be impacted. Now, on the small cap front, Roger identified 5 tickers that made sense to him today: RBNE, ENTX, VTYX, MAIA, and INBS. And we see, the levels that he was focused on. Now, the key here for Roger is that when he evaluates what is a small cap opportunity, he's not only looking for price action, but he's looking for extreme volume. And what I mean by that is volume that's occurring pre-market that's maybe 100 times more than what the normal volume is for that small cap. Also, folks, you need to be aware of the fact that caps are not impacted by the same things we pay attention to when looking at large caps. And that's because institutions are not putting any money into small caps. It's just coming from retail traders like ourselves. Also, as a caveat, if you're considering any of these trades, only enter them after the market opens. Okay. If that level hasn't been hit by 2 p.m., Eastern time in the afternoon, don't even consider the trade. And also, if you do get into one of these trades, we caution, do not ever hold them overnight. You'll be sorry if you do that. Anyway, let's just go ahead and switch the screens here and let's take a look at how these small caps have performed. Now, the small caps, the 5 that we're talking about today, are the 3 across the top, the 1 in the lower middle, and the 1 in the lower right. And just quickly, folks, you can see none of these have, come anywhere close, if you will, to giving us an entry opportunity. RBNE, its entry was at $2.24. It opened in the market and has just been, just been moving sideways. On MAIA, the pre-market high was $1.78. Once again, very similar. The market opened, nothing. ENTX, the pre-market high was $3.03. Same thing. Actually, this one just drifting a bit lower, so not sniffing that line whatsoever. INBS, the pre-market high was $1.47. Same thing, moving sideways. VTYX, this is one that Roger said looked a little interesting to him. The pre-market high at $8.41. The market opened up. It drifted lower. It's coming back right here where it was at the open, but not really, once again, not even looking at hitting this level, which would give you an opportunity to go long. So we had 5 small cap stocks here. Doesn't appear that any of these stocks are going to reach a level that would have us consider a long entry. In the lower left-hand corner here, this is TLT. Okay, this is how we keep an eye on the bonds. And as Roger mentioned, the key level for bonds today was 91.87. And we can see that, pre-market, we got actually, as Roger likes to say, we huffed and puffed and went above that level and settled down below it. But once again, we're not at that point. This is a point where he was hoping that as resistance, he was hoping that bonds would come up here and then break through there and give us a signal that the market might want to move higher, but no dice there whatsoever. So let's go back to the regular presentation. In addition to the small caps, Roger also gives us his pre-market large cap stock watch list. And on the short side, you can see that there were 7 tickers that he was looking at: RHI, Charter, KNF, Texas Instruments, VeriSign, LBRDK, and APD. On the long side, there were only 6 stocks: Rio, TEL, EVRG, DK, HCA, and MCK. And the interesting thing here about these long stocks is Roger says, do you notice that the stocks that he's picking to go long, these are not household names, with the exception of HCA. And that once again speaks to some of his pre-market comments, but just not really seeing any significant thing happening in the market whatsoever. And to that point, here were his pre-market comments. The markets were flat and pretty docile coming into the open. Now, the bonds were basically inching lower, sitting there right above the 8-day EMA, and VIX was kind of moving a little bit higher, inching higher. But let's see here. Be careful of the market. Oh, wait a minute. You know what, folks? Let me do something here. This is it's kind of outdated. Yeah, there we go. That's a lot better. Okay. Pardon me for that, folks. I had to update the slides. That was a slide from yesterday. Here's today's pre-market comments. The markets, once again, choppy and sideways moving into the open. That the bonds were moving a bit lower, but the VIX was inching higher, but it was still below that key 20 level that Roger keeps an eye on. We did note that the SPY, the QQQ, the MAGs, the Dow, they were all just pretty quiet, just sitting there right above the VWAP, okay? Sector rotation, interesting, is now favoring more defensive stocks. What we mean by there, healthcare, energy, real estate, blue chip. And yesterday, sector rotation was favoring more speculative stocks. It looks like this is shifting every day between defensive and speculative stocks, but this is what we noted today. He also indicated there's lots of volatility. Roger, he means like this: the market's flat, but it's just kind of vibrating like this. But price isn't going anywhere. There's volatility, but price isn't going anywhere. And that's despite that we have all these earnings that are coming out. So from his perspective, folks, if you're looking at opportunities in the market, be careful and just wait for the markets to clearly show their hand. That was his recommendation coming into the open. And I'll be interested to hear his thoughts here at midday. Now, once again, as far as today's agenda is concerned, our focus is going to be on the trading pit. He's going to review all the types of trades that he does take in the pit, and that includes day trades, swing trades, time spreads, and strangles. We're also going to have a discussion on what each of these trades have in common. He's also going to talk about the importance of relative strength and how he likes to use it. He's going to give us a walkthrough on some of the best setups that he sees, and he's going to give us a midday update on the short and long large cap stock opportunities that he sees. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also note, folks, that the chat is open to everyone. And remember the ground rules. Be kind and supportive in all of your posts. Keep to the topic. No political discussions allowed whatsoever. And please, folks, keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger is sharing. Because after all, he is spending time with us to give us an edge in the markets and to help us become more confident and consistent in our trading activity. So folks, we have a nice crowd here. It's about 4 minutes after noon. We got Roger in the room. We've got Matt in the room. What more could you ask for? Okay, don't all answer
Well,
at once.
we can
Don't
ask
answer
for
at once. What more could you possibly ask for?
we can ask for a lot more. We can ask for a
I
lot
don't think
more.
so, Raj. I don't think so. Interesting this morning. Pretty Pretty interesting analysis on your part as to what you see going on in the markets. I mean, honestly, Roger. And it was just like everything was just kind of like resting above the VWAP,
Yes.
just not much happening. And I think
No.
from that perspective, and Roger, just to give you a heads up, looking at those five small caps, none of them even came close to their entry point. So
No.
nice selection. But this week, that means that we've seen two opportunities and two of them hit, and that's out of 19, opportunities that we saw. So that's just a quick little tail of the tape there.
Yeah, I appreciate that. And as far as the, one thing about I'm more concerned about the hit rate versus, and I appreciate the way you're doing it. It's great.
Right.
And I do want to know, and I do want to know, it's interesting to see what percentage of them hit. But my concern is because think about it like this. What we're doing is well, at least this is what I'm doing. I'm setting an alert on the level. And if it hits, then otherwise, I never see that stock again. It's like
Right.
it's history, right? So let me just let me just explain, and I want you guys to understand this from a slightly different perspective. So when I'm giving you those stocks in the morning, and by the way, Raleigh's doing everything 1,000% correct in his calculation, but I want you guys to understand when you hear a number, and you're going to hear a number like in the next couple of weeks, you're going to hear a number like, well, we had 300 stocks, 10 hit, and 6 made money. I'm making this up to prove an illustration,
Yeah,
obviously.
good point. Yeah.
But you're going to hear a number, and it's going to be really high. Well, all that number is my hit list.
Yep.
So you know how sometimes I'll give you, when we do a hit list, I'll give you, like today my hit list is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's 15 stocks. That's how many I have on my hit list. Obviously, we're not going to be taking all of those, but
Right.
because they're daily charts, some folks like Richard, he'll set an alert on the VWAP and the 8-day. But my point is, don't get scared by the big number. Don't think you need to track 300 or 100 stocks. That's just all the stocks we're looking at for our entertainment purposes. What the real number is, and I'm really curious about this number, Raleigh, is the number of stocks that actually hit versus the number of stocks that make money.
Yep.
But I do want to know. It is interesting to see if that number stays stable, because sometimes, as you've seen, we'll have like 6 stocks on our list, and sometimes I can't find any.
That's right.
And sometimes we'll have one, and that one will hit, and sometimes we'll have 10, and none of them will hit. So
Right.
that's just part of the game, so to speak. That's just how things work out.
Well, from that perspective, and I see where you're coming from. I don't want people to basically say, "Well, Roger, you've given out 19 small caps and only two of them hit. Do you really know what you're doing?" That's not the issue here whatsoever.
No.
These are on the hit list, and I think everybody understands what the
Yeah.
hit list is and your selection process. But if I refine that, Roger, we've had two hits this week, and both were winners.
Perfect, perfect, perfect. Excellent, excellent. But do please keep an eye on the other number. I do want
Oh
to
yeah,
know
oh,
all.
I've got
I
that.
don't
Yeah.
want you to do anything differently. I just want to make sure folks understand,
Yep.
the nuts and the bolts of it. All right, let me just share my screen. So as far as the market doing anything today, and again, I want to confirm because I had somebody email me yesterday, and I just want to make sure now the response I got this morning when I asked you guys this question, it was like, duh, obviously. I mean, who would have thought otherwise? But we have people who don't always understand things. So just want to make sure you guys understand all that time that I spend in the morning talking about the charts. I'm talking about daily charts. The 5 minute, so in other words, if I'm saying I think the market's going to do this, that, I'm talking about the daily posture. I'm always looking at the daily chart in relationship. You see what this is a daily chart. This is a daily chart. This is a daily chart. This is my morning. I actually didn't even change it from this morning. This is everything we were looking at the morning. This is daily charts, daily charts. So when we start looking at the intraday levels, the ones I draw for you, that's what do you say?
You're sharing the wrong screen.
Oh, okay. Let me share the right screen. Thank you, Matt. I'm sharing the wrong screen, I've been told. So let me share the right screen. Thank you, sir. So now you should be able to see the right screen. So so right here.
We're looking at the mags. Yep.
Yeah, you're looking at the max now. Okay. All right. So daily. So if you guys hear me talking about, I think the market's going to go choppy today, or I think the market's going to go up today, or I think it's going to stay above the 8, I want to make sure you guys understand we're talking about the daily charts. Now, again, when I asked this question this morning, everybody was like, yeah, like what? Yeah, but I just want to make sure you guys understand that when we're talking about 5 minute charts, that's this. We're talking about daily charts. That's this. Now, another thing I want to make sure you guys understand, and this is actually a good point. I want to make sure you guys understand the difference between a run day and a choppy day. And when you have a day with, so there's basically what kind of markets you have. You have a market that basically doesn't do anything and is very quiet, right? But then you can have a market that doesn't do anything and is very loud. That's this yesterday. That's this right here. So the market moved yesterday. It moved really well. I mean, you could see it right here. But did it go anywhere? No, it didn't really go anywhere. It's still right here in this range. This is definitely a run day. There's no question about that. That's
Yeah.
a run day right there. When you don't have any of the wick. When you have a lot of the wick, why do I not like to day trade stocks that have a lot of wick? Because they're very choppy, they're very bouncy, right? Less wick, bigger move. We've talked about that many, many times before. But similarly, that's a run day right there. That's a run day right there. Okay? That's a run day right there where the candle doesn't have a lot of the wick. The more wick the candle has, like yesterday, half of the candle, or maybe even more, was the wick. Therefore, you don't have yesterday was not by any stretch of the imagination a run or a move day. We just had a lot of volatility, but we didn't go anywhere. So I want you guys to understand the difference between, because a lot of the times you will be confused. So if you are a day trader, can you, oh, oh, now I'm sure everybody heard that. I got the dogs, they're going crazy back there. So as you could see right here, if we're and there's a lesson here. This is really, really important. If you guys see a day like this, all right, a day like this, and you're day trading, okay, you have a two-sided market. Look at this V bounce we had. This is where we closed yesterday. This is the only part we didn't recover yesterday. So always try to differentiate between a run day, a run day, and just a high volatile chop day. Now, what's the consequences of each one? The consequences of each one is that if you have a choppy day and you can identify it as a choppy day, you can give your stops a little more leeway, right? Because you could start looking at picking bottoms like Matt was doing yesterday. If you have a run day, you should be trading directionally one way. What's the best way to determine whether it's a run day or not? There's two ways. The stuff that I'm giving you right now is gold, guys. You should write this down. Here, look. Two ways. When markets are closed, our morning show, how
Yep.
many stocks are making 52-week highs and lows? Is the number higher over 100? If it's less than 100, look, this is real time right now. You got 42 stocks making 50-day highs. That's a 2-month high. Do you really think that we're running away with the circus? Look, let me show you this in a different way. There's many, many ways to skin a cat. 58% of stocks in the NASDAQ are at the 50-day moving average, 62. Do you really think we're running away with the circus right now? No. What does that mean, Roger? Well, then if this number is less than 100, okay? And I want you to take a good look at this stuff. I mean, we're talking about stocks between $20 and $5,000, average daily volume of 300. This is large cap stocks that are moving. This is telling me 90-day high. My threshold is 100. I'm not even there yet.
Mhm.
So, well, okay, Roger, that's before the market opens, but then the market opens, there's a lot of other stuff. There's hanky-panky happening. How do you tell after the market opens? You use the ADD. You use the ADD. Matt, share your screen. Let me unshare my screen. I have it right here on my other computer, so I don't want to cut, paste, and move it here. Go ahead, Matt, share your screen. There's your ADD. The ADD is at 357. What did I teach every one of you for the day trading class? If you're not at 1200 to 1500 ADD, what does that mean?
Copy.
It means you're choppy. It means you're choppy. Matt, where were we yesterday? Can you go a little bit back to the ADD to yesterday? Just want to see 2 days. That's all. What was the high yesterday on the ADD?
402.
402.
30, or 35.
And the low?
853.
Did we go to 1200 or 1500? Were we anywhere near there?
Nope.
Okay. So before market hours, look at the number of stocks making 52 highs, 20-week highs. We do this every day. I've been doing this every day for 8 years with you. Nothing changed. I'm not teaching you anything new here, but I'm just trying to make you guys understand context. So please, please, please understand there are different ways to skin this cat. When I tell you, when I tell you that, hey guys, I don't think we're going to have a lot of directional bias today, which I said this morning. Let me unshare your screen, Matt. Thank you. I'm surprised we don't have more people coming. We only have about 600-700 people a day coming here. I'm not in the morning we have about 800. I'm surprised we don't have more because the information I'm giving you is really good information, like really, really good information. Am I sharing the right screen, Matt? Yeah, I am. Okay. All right. So there's not a lot of stuff here. All right. There's not a lot of stuff here. And Vold is telling you if the market, the Vold, okay. And this is, again, you see, this is a good question, iPad. So let me ask you guys a question. What do we use the Vold for? What time frame do we use the Vold for? The daily or 5 minute? Have you ever seen me talk about the Vold and the daily chart in one sentence? Okay. Okay. Thank you. Thank you. Okay. iPad, did they answer your question? Vold is Vold only applies to 5-minute charts. It doesn't apply to daily. I've never once in our entire time here together have talked about Vold aside from day trading. Okay. Okay. So I want you guys to, what I'm noticing a lot of you guys are doing is you're taking what I'm saying on the 5-minute frame and you're applying it to the daily charts. And a lot of you are taking what I'm saying on a daily charts and applying it to the 5 minutes. Please understand. Please understand. Okay? The stuff he's telling you gets me by every day. How high for ADD? And all of this stuff, by the way, we spent 14 hours on in the Alpha Zone Pro Getting Started Guide. Just FYI. And there's not one thing that I'm saying that's different from anything I've ever said. Okay. No, what I like to look at the Volt is I like to see this in the Volt. Pretend this is the Volt, okay? I want to see the Volt doing this. If I start seeing the Volt doing this, like I don't, it doesn't have any weight for me. So I need to see the Volt continuously making a trend throughout the day. I don't look at the numbers on the right side of the Volt, even though I probably should, but I don't, and I never have. I just know that anytime the Volt is moving, here, let me take a screenshot of this, and I'll show you what I mean. I'm glad we're talking about all this, but I want to make sure you guys understand what I'm saying. So pretend this is the Volt. The way I have it on my chart, this is actually the Volt, and a blue line. This line is the S&P. What I'm drawing right now. Why does it turn into an arrow? Okay, so look. See how the SPY is zigzagging, but it always comes back to the Volt. 5-minute chart, intraday. Nothing to do with daily data. Nothing to do with swing trading. Okay. 90% of what we talk about in the morning show is daily data. Now, again, most of you guys already understand this and know this, but I just wanted to make sure that you guys are understanding the difference between daily data and intraday price movement. Okay. And how I gauge things. And I'm not teaching you right now anything new. I'm not changing anything that I've ever said before. I'm just clarifying things to make sure you guys understand exactly what I am doing, okay? Because I want to make sure that there's no confusion. Okay. So, what I want to talk today with you guys about, well, first of all, let's talk a little bit about the market. Let's analyze the market, and then I'll get into what I want to talk to you guys about today. So, what has the market been? This is the daily chart. Okay. This is the daily chart. What has the daily chart been doing for the last 4 days? This is Thursday. This is Wednesday. This is Tuesday. And this is Monday. What have we been doing? Can anybody tell me? Yes. Yes. We haven't gone anywhere. We're not running away with the circus. Yesterday, we had a high volatility chop day. Today, we have so far a medium volatility. And today, if we keep going up like this, things may change, but we need to break out of this range. If we don't break out of this range, guess what? It's going to end up being a choppy day again. And I have no vested interest in it. I would prefer it to be a non-trending day. But we're getting into lunchtime. We're getting into my areas from yesterday. There's a lot of resistance here. There's not much volume coming into the market right now. And we have a lot of uncertainty because of earnings. So I'm as far until I see this getting above this area, getting out of this area, that we're going to stay in a consolidated range. Whether it's going to be a very wide consolidated range or a narrow consolidated range, that's a whole different story. And that I try to tell you and help you with all the time. So whenever I'm talking about, hey guys, I don't think we're gonna go anywhere, and you see the market going down 300 points, It doesn't mean we're going anywhere if the market comes back and closes right back in this area, like it did yesterday. Here, you could let me look. This is here. You could see it right here, actually. So we opened right. We went down and we went right here back above the VWAP, right there, right here, right there. This is where we closed. We literally closed where we opened yesterday, right there. So when you close, when you open, you don't have a trend day by definition. Okay. All right. Just wanted to make sure that everybody understands this. And I'm pretty sure that even those folks that do understand this, right, Mia, you understand this. Okay. Mia understands this. I want to make sure all the folks that understand this, uh, I'm pretty sure this is a good review. So now let's talk about the current market cycle. Where are we now? Absolutely nowhere. What about the QQQ? Let's look at the QQQ. We're not going anywhere. We're not going anywhere. We're not running away with the circus. What about mags? Oops. We're not going anywhere. Not going anywhere. We're still in the same area. We just haven't gone anywhere. Okay. That's what markets do sometimes, folks. Now, it's quite rare that it happens during earnings, but here we are. And why? Because nothing is moving. You will notice that when you have a day like this will be moving. This will be moving. Okay. And by the way, if you know what you're doing and if you've been doing this for a while, you'll come to the same conclusion many different ways. You'll start looking for stocks on your daily list. You'll see the number of stocks breaking out. You'll see the fact that price has been in the channel and hasn't been able to break above this level. All of this is telling us the same. It's all the fact that we keep staying at the 8-day moving average, the EMA, and the 15. All of this is telling us we're not going anywhere. What do I always tell you? If the averages are going through the price, the more they're going through the price, the less price action we are seeing. Okay? All right. So what am I expecting? I'm hoping that the market's going to break out of this range. Now, if you're going to ask me which way it's going to go, my answer is going to be I have absolutely no idea. So far, we're still looking really, really good, and we're still right at the 8-day. There's nothing really to get too concerned about here yet, as of yet. But we'll see what happens. I believe part of the reason why we're doing this is because there's absolutely no catalyst from the Fed. And it's kind of important. It's very hard for institutions to trade right now based on the fact that we don't have any bias. But at the same time, stocks get their mojo from the bond market, and the bond market made a major move today. And we're still not seeing anything from stocks. I thought today we may have a breaker, but now we're just at the 8-day. It was just a pretty gnarly gap here. So again, stocks are stuck. You're stuck with me in my analysis till these numbers start going above 100. It's just that simple. I know you want me to make it complicated for you, but I'm not going to do it. All right. So let me give you my stocks that I'm looking at right now on my watch list. I haven't done that in a while, and I'll give it to you with options. And then I want to talk a little bit about the pit and what we do in the pit. I haven't talked about the pit. I'm in the pit all day long. Matt is in Trading Zone Live all day long. I'm in the pit all day long. And basically I'm everywhere, but I'm 80% of my time is in the pit because I'm always looking for opportunities because that is how I trade. The majority of those trades I actually put into my own account. Not all of them. To be honest with you, I forget some because I'm so focused on you guys. That's really the only reason why I don't. Like I forgot to put that in for myself. But that's the way I trade. So it's a really great great way to kind of follow me and kind of sit next to me. So if you have Trading Zone Live and if you have the pit, it's kind of sitting in between Matt and me. It's kind of like what Clyde. It's kind of what my cat's Mia is doing right now, just kind of sitting and chilling with us. All right, let's start with the short list. Okay, Home Depot. Right at the 200-day moving average. Now, it's on my watch list. Would I short this stock right now? Absolutely never. No way in heck. I would want to see it break below the 200. Is it on my watch list? You better believe it. Why? Because if Home Depot breaks down right now, it doesn't really have much stuff till here. There's not much stuff here. Look. Here, let me make this a little smaller. This is where all the fun happens around here. So if we can break through this area, and we're not overextended, but we need to break through this. This can be support right now. Although the price action here is pretty sheepish, that could be support. We want to see a break. Okay. Okay, let's continue. Price action's looking good. We're beyond all the averages. And by the way, if Home Depot breaks down, that's going to be very, very poor for our economy. Just heads up. Home Depot is a major economic for like real estate and industrial people. Home Depot is a big gauge. KMB, that's a very nice looking stock right now. It's looking great on a 5 minute. It's looking really good, and it's looking good it's our economy. Nice looking stock. Probably would wait for a pullback to the VWAP. Let's set an alert. Okay. All right. But I would like this stock right here. Nice smooth price action, breaking down, not overextended yet. It's not on this side of this wall. So we're still looking good. We're still looking good, and we're below this low. Volume's a little bit on the low side, but it's a pretty large stock. So I like this for a short. I do like this for a short. Trex went right to the VWAP and now pulling back down. I like this. I like this. This may be a good short right now with a profit target near right here, 48.50. It'd be nice to see if to break this area here, but I like where it's moving right now. It's a nice stock at a good positioning right now. And you got earnings you still have a little bit of time. Not overextended, nothing like that. Cracker Barrel. Oh, my wife. She loves this place. Can you open the door, Matt? Thank you, sir. Are you long, short, anything right now? Looking to go long? Okay. Let's be careful. Thank you, sir. All right. Nice looking stock. Let's look at the options here. 29 days out, 86 delta. Yeah, I would go 86 delta right here. Right here. Yeah. Right there. You can work this order, but that's where I would go. And you're getting a lot of intrinsic. Really, Bodine, good to know. Ken, whenever we travel, like when we're going, tomorrow my wife is leaving me. She's going to Universal Studio with my daughter. Matt and I are going to be fending for ourselves tomorrow. Yeah. So you're going to have to get us lunch. Yeah. So she likes to go on the way. She's leaving me again. She's going to Universal Studios with Rachel tomorrow. And actually, they're taking my son. I'm really happy about that. At least they can have some fun. I have all my excitement. I get all my excitement that I need from you guys. Nice trend. Very nice trend. I think I mentioned this stock right here. I mentioned this stock to you guys right here. And I mentioned this stock to you right here. And it's still going down. Now, for this stock, I would buy a put. And I would go right. That's what I was saying. I would go right here, 29 days out with an 86 delta. And I would work the order because the spread is really wide. LBRDK. I don't know why they have to have like these long ticker symbols.
I know. I was wondering
right?
the same thing, Roger.
because when I see a ticker symbol like that, I automatically think it's an over-the-counter stock.
Yep.
So, and I stay away from it, and then I realize, hey, there's I have calls up. Thank you, guys. I'm an idiot. Okay, let's go back. Cracker Barrel. Let's go back. Sorry about that. I think the only one I gave an option was for this one. Right here, I would go 29 days out. I would go right here, 81. I am an idiot. Sorry about that. 40 put right here. Cracker Barrel. 29 days out. Yeah, let me continue. Yeah, I mean, it's just, and Comcast does the same thing, and it just makes me not want to. I think that if I think that if these stocks changed their ticker symbol, they would get more volume like
Look more
instantly.
legitimate.
Yeah, yeah. I
Yeah.
mean, doesn't make any sense. Thank you for giving me the heads up. I wouldn't do I wouldn't do a spread on these stocks. They're pretty cheap. You want to do spreads on stocks that like the implied volatility is high. Trex, you want me to look at Trex? I'll take a look at Trex. Trex, I would go 29 days out. Oh, somewhere right here, 52.50. I mean, there's no reason to buy a spread on these stocks. I mean, you could, but I just don't see the reason for it. Okay. AON. A little, I wouldn't day trade this if you paid me, literally. If you paid me, I wouldn't do it, but it's not a bad swing. I would go 29 days out. 80. Okay, this is a perfect example of where you would want to do a spread, okay? This, look at the price of these things. So we would go to a point 50. We start the spread at point 50. We would go to 340, and then we would do the 330 because we don't really have a choice. And it's $10 spread. So we want to make sure that we get this for less than $5. Remember, less than 50% of the spread. Thanks, Raleigh. And yeah, that was actually the last short. So your timing is good. Let's now go to the long side, okay? Dell. It's a very nice. What kind of a pattern is this, folks? Exactly.
Yep.
Exactly. Perfect. You see how boring I am? Nothing changes with me. Perfect. Look at that. Just needs to go just a hair high. Oh, no, we're in the wrong place. Just need to go literally a hair higher, and we got a good entry right there. I like this. I like this. I like this. See, swing high. See, we're buying off a swing high. This morning, I was explaining to you if this was not the high, and if there was a higher high here, that would be a weaker trade. Yeah, I haven't done the options yet, but yes, thank you for that. I need all the help I can get. Uh, yeah, I would do a spread here on Dell. So I would go to point 50, 155. It's $8. And then I would go one strike against me further up. And that would be a 250 spread. What's half of 250? It's $1.25. And that's the most we would pay for this option spread. If you can't do that, then you would go 155, 160. Okay. Exactly, John. I don't care how good the chart looks if you can't get. Usually, John has a good. He says so. No matter how good the chart looks, if the spread is over 50%, don't take it. Yeah, well, I didn't say that. Look for a different spread. The odds are, if you can't find the odds are, and when I say the odds are, I'm talking like 85% of the time that if this one won't work, then the next one will work. One of them will work. So usually it's just that one combination ends up not working. Okay. But yeah, don't do it because look, John, you're eating into your profit potential. That's the reason why. If you buy, okay, let's say the spread between the strike price is $1, okay, and you pay 75 cents. Well, your risk is going to be 75 cents theoretically, assuming you just let it expire. You're going to be 75 cents, but your profit potential, but your profit potential is going to be 25 cents. So, see what I mean? At least here, if when I'm saying 50, at least most 50%, you spend 50%, you could make another 50%. I like that potential. I like that. Oh, there Dell goes right there. Now it's above our area. See? We needed it to be above this area right here. I like someone's buying Dell. Get volume. Someone is buying Dell. Okay, let's continue. So in this case, what I would do is I would very simple. I would go to 0.53 right here, $1.25. Let's continue. You. I actually have some really good stocks for you guys. I
Hang on. It's
Yeah, yeah.
who approved that ticker symbol?
We never had that ticker symbol. See, I don't discriminate. Um,
You
but
herd of sheep.
yeah, yeah. Right here, I'd like to see it a little stronger than it is right here, but it is above this area. As long as it comes back here, I would like it. And this is an industrial metal and industrial stock. And I would also go about 29 days out, and I would go 0.71 right here. They're actually pretty tight. 19 calls. Now they're a little expensive, but 50% you're paying for intrinsic value. So you're really only paying about $3 for these. Again, kind of expensive. You know what? You could do a spread. You can go right here, 22.50 versus you could do 22.50 or 23 versus 24 and pay 50 cents. Okay? Which is pretty good deal. Let's continue. ANET. That is a very nice setup I'm giving you. Like that's a really nice setup right there. Okay? Really nice setup. Also an A line. Look where you have a lot of profit potential here. It's a really nice setup. Would I buy it now? No, I'd uh, wait for it to get back right here to the VWAP, but I do like this a lot. If I was day trading this, I would go 8 days out and I would go right here, 152.50 versus 155, and I would pay $1.25 for this. If I was swing trading this, and this is right at the 8, so you can go ahead and swing trade this, I would go about 29 days out, 69 delta. No, I would also do a spread. Go right here, 155, 157.50 also, but I would just go further out if I was swing trading it. Okay. That's the only difference. You're going to get more upside with the 8 day. You're going to get more leverage up and down if you're day trading than use the 8 day. But if you're going to convert it into a swing, then use 29 days out. You know what's interesting, Raleigh? We used to have some people, and I noticed the people that come in here, and I've noticed expiration days are written right here, by the way, in blue. You could see them right here. I've noticed a lot of same people come, and I noticed that a lot of people would ask certain questions, and they don't. It seems like a lot of folks who are listening to me now, they're like, "Oh, I get what he's saying. It makes
Yep.
sense." So, and it's really important for me to make sure you guys understand what I'm saying. Okay.
Hmm. Well, and the thing is this, Roger, once again, for those of you that have been with you for a long time, it's not like you come in every day and you drop a new pearl of wisdom. You're basically reinforcing the same process that you and Matt do day in and day out.
Yes, the same thing. When you give money, are you saying buy first, sell second? Michael, I don't understand your question. Send me an email. Roger, when you give us money, are you saying buy first and sell second? I
I
don't,
guess when he means the spreads, would
uh,
be my guess. I don't know. Yeah.
the spread? Just send me an email and I'll respond to you. All right. Um, Good, Linda. I'm glad to hear that. I'm glad to hear that. Also, a lot of people come in here for 15 minutes and then they leave and then they come back and they're doing a million different things. So, anyways, nice stock, very nice looking stock. Look how it bounced off the 50 day. It's rejecting the 50 day clearly here. Very random price action, and now you could see accumulation is coming in again. Okay, AMD, AMD. I would wait to see if AMD can get back into this range. Right now, it's not that bad, but I'm really loving it right now. So we're going to hold off for AMD. A little sheepish for me. That's nice. Now, see how it's coming up to this area right here? When you see a stock already near this area, I mean, you could still take it for a swing. It's good till probably about here, but be careful with taking swings here. Now, day trades around here are really great because you're getting a lot of momentum here. You got a gap, you got a lot to work with, and you're at the VWAP right now. Richard, did you set an alert on this? Okay. There's a VWAP alert right there. We're bouncing off the VWAP. We haven't closed the bar yet. And look at the volume coming in. It's not bad. Okay. Just FYI. You too, Omar. Take care. Send me an update as usual. Okay. So we would, if we were day trading this, we would go 8 days out. We would go, if we were just buying an option, which I wouldn't do any spreads here. It's ridiculous. I would just buy the 2350 call right here. That's all I would do. It's a nice looking stock. Um, Applied Materials. Applied Materials is looking a lot better than AMD. Definitely coming back. Set an alert here. And crossing out price history. Right there. I like Applied Materials. This can be expensive. And there's no reason to day trade this. You could swing trade this. It has a lot of upside potential. You can go 29 days out. You can go 230 versus 230, 250. And you could do this for about a buck and a quarter. Okay. ALB. That is a beautiful, what kind of a pattern is this, folks? You know what kind of pattern it is. The kind that makes money all the time. All right. 29 days out. Giving you guys some really nice looking stocks today. I'll tell you. It doesn't work that way. It's not, that's David, send me an email about good question, but actually I want to answer this question. Is it a good rule of thumb if one contract is more than $1,000, use a spread? David, it depends on your account size. If you have a 3 million, $10 million account, it doesn't work that way. But if you have a small account, it just depends. It depends. As a rule of thumb, you shouldn't risk more than 2% of your account on any one trade. Now, here's the difference. I didn't say put 5% into one trade or 2% in one trade. I said risk. So whatever your stop loss, whatever your risk is. So if you're usually, you got to look at your diary. You got to look at what kind of risks you're taking. If you're taking some folks take small trades, but they have a high win rate and they don't take a lot, but they're sized to lose. In other words, they're not looking for a stop loss. They're just, if it either works or it doesn't work. And that a lot of traders trade that way too. So that's a different story. Okay. Okay. But I love what this is doing right now. This is looking lovely. 29 days out. You could buy a 96 and sell the 98. And you could do this or maybe even, the 98 and sell 96, 98. And you could do this for $1. $1. Do not pay more than $1 for this because the spread is only $2. Okay. I'm giving you guys some really good stocks. Let me just see how the SPY is doing.
Moving up.
No, it's moving up. See how Microsoft is doing nothing. AbbVie is coming up a little bit. All right. Well, we're moving okay. We're moving in the right direction. All right. Let's continue. I only have a few more. GE. Oh, I like GE a lot, actually. Yeah, I would do a spread. I'd do a 305 versus a 307.50, and I would spend no more than $1.25. Okay. And last but not least, this thing can really move. Jacobs Engineering. It's not very liquid though. So I would probably, and it's not very liquid and it has monthly options. So I think we'll just skip it. Okay. So I want to talk a little bit about, I want to take a little bit
Hey,
about.
Roger, just real quickly, could you run through quickly what the longs were? I had Dell,
Yes, of course.
U,
It's not a
and
problem. I have it
yeah,
right here. Dell, U. And I would hold off on U right now, but Dell I really like, but I'll give you all of them. NET I really like a lot. AMD I would hold off right now. APA I like a lot for a day trade. Applied Material I like for a swing trade. Albemarle I like for just about anything. GE I like a lot. And Jacobs Engineering I like the trend, but the options are a little wonky. And that concludes the longs.
great. Thank you, buddy. I'm going to post these for everybody.
Thank you. So, not a problem. Not a problem. Now, let me just go over here. Now, I want to talk a little bit about the pit, talk about what we do in the pit, and then I'm going to do a quick class for you in the pit. But so we do the pit is the reason I launched the pit is uh, all of our programs, they have specific rules, and more rules. In other words, stealth surge, you need to have seasonality, you have to have a trend, true trend, you got to have a pullback. They have to come out on a Monday. They have certain rules. And and rules are okay. Rules are good because those rules give us consistency and we like that. But in the real world, in my world, I don't trade based on this is this and this is that and this is that. I take trades whenever I see fit, right? So, and I trade a specific way. And um, what I did 2 summers ago is what I did 2 summers ago. I took my free Telegram channel and I started doing free trades. And I was like, folks, I'm just going to do these trades and I'm going to show you how I trade. I'm not going to charge you anything. You don't have to take them. And I would give, 1 to 5 trades a day, and I would do all this stuff. And folks started really liking it, and they were surprised at how active I was because I'm very active in real life versus the swing trading stuff that we were present. You see, our publisher believed that day trading would be too fast for you guys, that it would be too much. And I said, no, I think people would really like it. So that's why I launched it. And it took off like crazy. It became the most popular program in the history of the pub. But the way it got there was me simply doing 160 trades. And I did those trades in front of you. I didn't charge anybody anything. And then I launched the program, the pit. And I thought it was great because I did 160 trade. You publisher did not know. Oh, he knew. He didn't care. I mean, it was free trades. What does he care? So and then everybody was hooked. And this is a true story. True story. And so as Raleigh will tell you, we didn't have anybody day trading before I left. So and when I say day trading, I'm usually talking 1 to 3. I know day trading is closing out a trade at the same day, but for me, closing a day trading is more like 1 to 3 days, and anything beyond 3 days is more like swing trading. Okay, so if I'm holding 3 days, that's like really short term trade for me because I don't really look at it time. I don't look at the time I spend in the trade. I look at the chart. So it's a different way of looking at it. So yeah, it is. It was a continuation of the original boot camp because that's how I trade. First, I made the boot camp 8 years ago, and then I made the pit. But the pit was very actionable. Um, there you go, Sandra. Turned her into a day trader. So my point is, I wanted you guys to see what real trading is all about, like real trading. Like here's my entry, here's my exit, here's what I'm going to do here. And people, I just got to know that Trump pardoned somebody. Wait, do you know who he pardoned?
I think the Binance CEO.
Oh, forget it. I just see a little blip here that he pardoned. I'm just curious who it was. Okay, I can't resist.
Whatever. Yeah.
He's pardoning people. All right. So thank you for that. So we had 160 trades. We had a 96% win rate. Let's not. I just wanted to see who it was. We don't need. It's not a discussion. Let's not get into the politics and all of that. So let me tell you the kind of trades I do in the pit. Okay. Basically, what I do in the pit is I look for stocks like I'm giving you right now. Every stock that I gave you today, no, I don't want to lie to you. Every stock on my long list today was a stock that's on my watch list for the pit. Not every stock on my short list, because frankly, I'm not watching shorts till we really have a reason to look at shorts. But every stock, God help me, every stock right here on this list is a stock that I'm watching. And most folks know that because if you were in the pit today, then you saw that I gave you most of these ticker symbols.
Right.
These are my actual watch list trade. These are not stocks that I just came up with top of my head. So what I do is I basically day trade these stocks or swing trade these stocks. But that's not the only thing we do in the pit. What we also do in the pit is we do a lot of non-directional trades. What is a non-directional trade? Well, let me give you an example. So earlier this week, we did a trade on MO, Altria. And by the way, these are when I do these type of trades, what I'm showing you right now, I mark them as unofficial trades because they're not really based on the way on my directional trading style. So they're bonus trades. The reason they're bonus trades is because if in the future sometimes I want to add another program that just does these, I can simply calculate that and not have anything mix and match. So what type of trades that I did? Let's just take a look at a trade that we did in the pit. So this stock MO, Altria, earlier this week, we noticed that the 10-day volatility was over $1. Anytime I can buy a straddle or a strangle, and I could spend about half of what the 10-day ATR is, I'm going to take that trade. Why? Because if I spend 65 cents on a trade, and if the average volatility is $1.09, that means I'm expecting the at the money price to move at least $1. That means I'm buying the spread for cheaper than it needs to be. So what do we do? Well, let me tell you what we did. We bought the 64 calls right here. We bought these calls right here, and we bought the 53 puts. When we did this spread, the 63 puts and the 64 calls, together they were 65 cents. Please correct me if I'm wrong. I know a lot of you took this trade. And we did this trade right here on this day. And guess what happened yesterday? The stock went up. The 63 put was still at about 9 to 10 cents. But the 64 call got up to about 75 cents. And you know what we did? We sold it for 80 to 85 cents. Bought it at 65, sold it at 85. We do those type of trades all the time. With these type of trades, we're not really looking for direction. We're looking for movement. We're looking for movement. Did anybody here make money on this trade or take this trade alongside me? Let me know. We have about an 8-second delay here. Yeah, I did. Brendan did. Christopher did. Gus did. Michael, you did not. Okay. Did I describe, Ed did I describe the trade accurately? May 23. All right, there we go. Yeah, the straddle. It was a strangle. It was the same. It was a strangle. Yeah, 80 cents. There we go. 23. Okay, good. So you see, we have a lot of people here in the pit who took this trade. So when the markets are doing this, like they were doing yesterday, we took a strangle and we made out like a strangle. Why? Because I was anticipating a non-directional chop, chop, chop fest, which is exactly what we've been getting, and we're still getting it right now. Okay? So, folks, do you see how we're and by the way, that was a bonus trade. That's not even part of my win rate. Now, do you guys want to know what my win rate is from all the trades we've taken? It's 94.1%. 94.1%, 94.10%. That's all the directional trades. You know what my win rates from these trades is? About the same. You wanted me to tell you another type of trades that we do in the pit? We do time spreads. So we did a time spread on BSX. Okay, the stock right here. The stock had earnings. Okay. Nice, good. So, and right here, we were looking at the one this is a time spread. Time spread, we take advantage of disparity in the strike price of the options. So what we did was we sold this call right here and we bought this call right here. We were completely hedged. Okay. And we liquidated the spread yesterday. I don't remember how much we made. I think we sold it for 55 cents or something like that. But we made about 20 something percent on that trade as well. And before that, we did another time spread this week. So not only still in it, Bob. Okay. Yeah. Well, yeah. You were having problems getting filled. But those are the kind of trades. Those are the kind of trades we do in addition to directional day trades and swing trades. So what I'm going to do right now is, and by the way, we have and the win rate on these trades is about as high, maybe not 95%, but it's about 90%.
Yeah.
It's about 90%. It's really, really good. And the MO trade that I showed you, that was a trade we closed out yesterday for a profit. So, and let me just go back. We did another trade. We did another time. We've been doing a lot of these time spreads lately because it's earnings season.
Because it's
And
earnings. Yep. Yep.
yeah, here, let me show you another one we did. One second. We're in one right now, actually. I'm not going to give that one out, but one second, one second, one second. Yeah, I got us some really good testimonials on that. Okay, here we go. There's the BSX. I'm going to look at it right here in front of you guys. This is all in the pit, stuff that's going on in the pit. Took a winner on UNH, Nerve. Let's see here. I should have it here. I want to remember what it was. Was it Hertz? No, it wasn't Hertz. Do you guys remember what it was? The one before it? I'm losing my mind. I know we just closed another one out right before it. Losing my mind.
Was it BSX? Some people are posting in here BSX.
It was no BSX. We just got out of that like 2 days ago. It was
2 days ago. Okay.
Yeah,
Okay.
it was another time spread that we did. SLB, 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 Schlumberger.
Schlumberger.
In at 25, out at 34. Schlumberger right here. Yeah. Thank you for yeah, Schlumberger. So yeah, we're doing really good on these trades, and that's in addition to the type of trades that we've been doing. Now, I'm going to do a presentation right now. Now, I want you guys to know that the pit has been, I believe it's the best-selling, don't quote me, but I believe it's the best-selling service in the history of the pub. It's up there. It's definitely up there. And everything I'm going to show you right now actually happened, and I'll show you the whole story. But this is this is my pride and joy, and this is where I actually spend the majority of my time. I'm going to be honest with you. I spend a lot of my time in this room because I absolutely love it, and I think it's just the coolest